Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Hello everybody, my name is True Demon and I'm the Devil's Stockbroker. This tutorial video is going to be describing to you a concept known as liquidity hunting. Liquidity hunting describes the way that major institutions and market makers fill their orders by waging a psychological war on retail traders, particularly day traders and swing traders who hold their positions for only a small amount of time and trade using stop losses and other ways to protect their investments and minimize their risk. Market makers have to fill very, very large orders, and it's not something that can be done very easily. So in order to do it, they look for areas of significant liquidity or large blocks of orders that are clustered around a specific price area or a price range. The market makers then cause the price action to move in such a way that it attracts further liquidity into these areas because they understand them to be psychologically significant. What they are currently doing is laying a trap, and they are trying to entice more and more traders to add orders in this specific area where they can then be trapped and the market maker can fill their order at a smaller price in order to get the best price possible before they move whatever the asset is in the other direction. Now that I've described to you what it is, I'm going to show you how to find it and how to profit from it. In order to show you this, I have to go to a Forex pair where you can see the greatest examples of liquidity hunting happening in real time every single day. Currently, what we're looking at is the Euro-US dollar currency exchange on Forex. First, I have to describe to you a little bit about market structure in order to help you spot areas where liquidity hunting takes place. So for that, I'm looking at a long-term time period on an hourly chart in order to show you some areas where liquidity hunting can take place. The first thing that you have to look for when you're looking for liquidity pools or liquidity hunting is you have to look for market structure. An example of market structure is this area where you see the market is trading in a specific range. Here in this example, we can see that the market has, since the 22nd of April, been trading in this range between 1.03526 and 1.05151 on the Euro-US dollar exchange. These are the upper and lower bounds, or the support and resistance, for the Euro-US dollar that's been traded over the past 2 months. And what we can do is use this as our levels that show when a move is going to take place in one direction or the other. Now, I have blocked off this chart with the replay tool on TradingView so that I have no idea what happens after this point. We're just going to trade this purely off of the technicals that are in front of us and watching the price action with a little bit sped up so that we don't waste all of our time. I'm only going to use 2 free indicators in order to show you exactly what's going on. First, I'm going to show you the Htf Liquidity Indicator, which is going to create these green, red, and gray lines that you'll see here on the far right end of your chart just after the price action. In addition, I'm going to ask that you download the RD Moving Average Official Indicator by Phoenix Binary. These 2 indicators will significantly help out your day trading. So the Htf Liquidity Indicator, you don't have to change anything. On the RD indicator, you'll need to adjust these settings according to your style. But what you're mainly going to be focusing on is your moving averages, which are smooth moving averages. I have mine set as white to the 21 period, green to the 48, and I have a dynamic, which is this green to red, set up for my 200 period moving average. And then I also have big ass candles marked out as these arrows that you see on your chart for green and red on these large engulfing candles that will point out. Once you have all of this set up to your preference, we can move forward. So looking at the market currently, we see that we are currently in a consolidation wave on the hourly chart, but we notice that at least since the 10th of June, the 50 and the 20 moving averages have crossed below the 200 on the 1 hour chart. So we can infer we're in a downtrend. And just like most day traders, we want to be trading with the trend. However, what we notice is that there is a significant area of price action which has taken place here, as called out by our Htf Liquidity Indicator. These red lines that you see here are liquidity pools. A liquidity pool, just as I described before, is an area of extremely significant price action, a place where market makers have seen a large number of orders, specifically stop and limit trigger orders, which are laid out in this area. What we can see in this current structure is that right now, the market has been bouncing between these two areas for at least the last couple of days. And any day trader that's looking at these two areas, extremely zoomed in on the chart on the 10-minute or the 15-minute, is not going to notice this unless they are paying very close attention and zooming out their charts like we are. And too many day traders that are looking too zoomed in will get trapped in exactly this move that is about to take place. So we can see that there's a large area of liquidity down in these two areas. I mapped out this area of support, and if we go all the way back in time, we will find that the last time that we touched this area of price action was way back in December of 2016. So the chances that we break down to this level and stay there, extremely low. So let's go back to the 15-minute chart now that we've mapped out these areas, and let's go and find our support and resistance levels. So we see currently we have our major support and resistance here and here. I'm going to go ahead and mark these out on thicker lines so that we can tell the difference. And I'm going to put these lesser resistances in blue. So day traders that are trading on this current structure are likely seeing the area of support in front of us here on the 15-minute, and they're thinking when it touches this area, it's going to turn back around. This is an area of significant resistance. The price doesn't like to go back here. And there's also other traders who are extremely bearish on this particular currency that may be thinking, if it breaks down to the downside, that the price will continue and I'll be able to take a nice scalp. Either one of these traders could be right, but many traders will not be patient enough to actually watch to see what takes place on these on this currency. So what we're going to do is we are going to take the position of somebody who's extremely patient and watch to see what takes place when the market maker drives the price down through this area into a liquidity pool in order to fill these orders. What we're going to take a look at is how the price action plays out for the next several minutes, and we're going to look and see which direction the price chooses, and we're also going to see if we can't get a better fill than everybody else. So right here in this current area of support, the price is bottomed out right here at the tip of this liquidity pool. But we haven't received any confirmation candles, and there's a chance that we're going to see some traders that are going to end up getting swept up in a large amount of orders. We can see that volume is moving down while the price is also moving down, which is telling us that the price action to the downside is weakening, and also many other day traders are thinking the same thing. So at this point, many traders may see that we have broken down through this area of resistance and may decide to go long, but they're too early. Right here, we see a massive red engulfing candle, which has completely swept all of the orders that were taken long here on this green candle and been immediately stopped out. Anyone that was currently long on this exchange just got stopped out well below this wick. For us who have been patient, we can see that the currency got driven down, but had a really deep wick and never reached this area. So now we're going to be watching this candle to see what it closes at and look for a green confirmation candle. However, many hasty shorts will likely see this big engulfing red candle and immediately go short on it and set their stop loss to the top of the wick. Let's go ahead and slow this down and see how this plays out. Notice that immediately this candle wicked up extremely high, stopping out any shorts that had a position here. At this time, we can say that this candle serves as our confirmation, because at first we were moving to the upside. We were bouncing off of support. However, market makers drove the price down, stopping out any longs that took a position here. And then immediately after shorts would have taken a position to take any continuation to the downside, they immediately got stopped out 30 minutes later by this candle, which is our confirmation candle. After watching this price action for just a little while, we can see that the price is moving down a little bit. So what we're going to do is we're going to see if we can get filled just below this wick, and we're going to take a long position for a 5-to-1 risk to reward, and we're going to set our stop loss below the next liquidity pool as our risk to reward. So halfway down the green candle, I'm setting my stop loss below the next liquidity pool, and I'm going to set my take profit at a 5-to-1, which is an extremely lofty swing, but, well, I have some confidence. So currently this candle is wicked down to this level already. I'm going to see if I get my fill. Right there. So we got our fill, and we're now in the position. So now the worst thing that happens to me is I end up with losing, we'll say 1% of my portfolio versus a take profit at a 5% gain on my portfolio. So let's go ahead and speed this up, and we'll just see how this plays out, because this is quite a long swing. And just like that, suddenly the market maker is taking it in the completely opposite direction. And we hit our take profit in 5 hours and 30 minutes. So it took a couple of days for this swing to play out. But just like that, we would have made a 5% gain on our portfolio just by detecting this liquidity pool and seeing that the market makers were going to drive it down to this area and try and fake out a bunch of traders that had their stop losses way, way, way too tight. This same type of trading takes place in the stock market every single day, and this is how traders can take advantage by spotting these areas of liquidity. So let's recap just really quickly so that everybody gets a clear picture of what's going on. The first thing that you're looking for are areas of symmetrical structure when a price is ranging between two prices. You set your resistance and support levels just like you normally would. It's ideal to do this on a large time frame, at least an hourly, but daily is better. Make sure that you set your support and resistance levels so around this symmetrical structure, and look for areas where HTF liquidity shows high concentration of orders. Drop down to a 15-minute time frame. You can set smaller support and resistance areas here and here. And you can also go a little bit further back in time, and you can see other areas of support and resistance, which you would find here. Now, I was actually being a little bit conservative with my estimate, but I wanted to take a very short-term trade. It's not my style to hold on to a trade for 20 days or however long it would take to hit like a 10-to-1 risk to reward ratio on this profit. Probably would have taken a few months, actually. But in this case, with just a single trade, by being a little bit shrewd and a little bit patient, we were able to wait for 2 days for this trade to take place, for us to get filled on our execution. We got a huge discount on the price, and we made a 5% profit on our entire portfolio if you're doing the right risk to reward setups. When these liquidity hunts take place, it is unbelievable how high and how fast the price can move. And take note, this can happen in the short direction as well. So now I'm going to show you that. So here on the same Forex pair, euro to US dollar, I've gone back in time just a little bit to look for a short position to show you the exact same situation, but taking a short going to the downside. So here we have a structure which is showing on the hourly that the price is consolidated in this structure for well over a week. Right now, the price is starting to move and bounce up off of the 200 moving average, and it's even broken down below a little bit. So Here, we're seeing a lot of bullish indicators showing continuation. However, we bounced off of this price multiple times. There's two possibilities here. If we were to be looking at this for a long play, we would want to see confirmation candles taking us to the upside and breaking up through this area of resistance, which coincidentally is an HTF liquidity zone. Now, if you're trading this as a scalper, you could probably be trading this to the long side between here and this location, because you could assume that the price is going to make a move towards this area of liquidity just based on where the trend is. However, once it gets there, you do not want to be in an active trade because you are not sure which direction the price is going to move after that. So we're going to just play this looking for a liquidity hunt and seeing where the institutions are going to take this trade. Okay, so we've had multiple bounces that took us up to the liquidity zone, but then immediately the price was taken back down to the downside. So this has basically chosen our direction for us. At this point, we can see that the trade is being taken to the opposite direction. Even though it was a major bullish move, immediately those who went long on this because they didn't wait for the breakout immediately got whipsawed back down and they got stop loss hunted. So now at this point, we can go ahead and enter into a short position for the exact same setup. What we're going to do is we're going to set our stop loss above this liquidity zone. I'm going to be a little bit more conservative here because it's possible they may take it back up in this direction and break through this zone in order to get their fill. And I'm going to go ahead and set myself up for the same risk to reward ratio. We're going to be ambitious. Looks like my stop loss is a bit too far away, so I'm only going to go for a 2-to-1 risk to reward ratio on this one. Now, this could be a very long trade, so if you want to make this a better setup for yourself, and if you're willing to take a risk, but know that this, despite being confirmation, could still go against you, you could set up your stop loss just above this wick. And then set yourself up for, I'll go for a 3-to-1 risk to reward ratio. So if you're betting 1% of your portfolio at a time, your max loss is 1%, your take profit is 3%. Now we'll go ahead and let this trade play out and see what happens. Seems to be going in our favor, and it looks like we're going to reach our liquidity zone right here. And there we just hit our take profit. So this brings us back to the same exact area where I had pointed out before that shows there's another liquidity zone right here. So you can see that trading within these structures can be extremely profitable if you're willing to be patient and take these long trades when you see these setups. Again, looking for long symmetrical structures that are taking place over a long period of time, usually on an hourly chart, and waiting for long swing opportunities. These trades take several days to play out for the most part. If that's not your trading style, then it's not something that I would recommend for a day trader, but at least be aware of it so that you know if you're going to get bamboozled, and try to not get yourself caught with your pants down. I want to show everybody one more example of this that I actually called out in real time and let other people in Hell's trading floor know that a liquidity hunt was about to take place on GMVD. This is G Medical Innovation Holdings stock ticker, which was already on a huge tear for a significant period of time. I had called out that there was going to be a retrace back down to 70 cents. Now, I was a little bit ambitious with that, but the reason why I had called it out is because there were several zones of significant liquidity that were down below the 80-cent level. And I said that the price is going to get taken down to this area where we can set limit orders in order to buy them up. So that's what we did. We went ahead and we set buy orders at multiple levels. There was a level here at, I can zoom in on my chart a little bit. I had set up a level here down at 80 cents, and the last level that had the largest order block was at 70 cents. So in all of these cases, what I was watching was actually the 5-minute chart, and I had noticed these areas of liquidity which GMVD had torn through over the past several trading days. And I saw that there was weakness developing in the chart late in the afternoon on this 22nd of June. So by using the Htf Liquidity Indicator, I was able to map out these areas where there was going to be significant price action and a pretty good likelihood that the price was going to be brought back down to these levels. So despite closing green on the day back here on the 21st of June, I was very insistent in my statements that GMVD is going to see downward price action because of where it closed and where the liquidity was sitting at the time. And today we just had that happen. So right here in this candle, at least one of the orders had gotten filled, and then another. And since then, it's entered into consolidation. So at this time, it's not certain if that last level down below 75 cents is going to get hit. Really, the liquidity level is all the way down at 73 cents. But if you're looking to go long on stocks like this, especially penny stocks, you have to recognize that they are mostly in the hands of market makers, and they will take advantage of us, and they will drive the price down just like they did here. This thing saw a huge rip in the morning, and then it dropped, completely cratered. This was an exact example of a liquidity hunt in a stock, specifically a penny stock. Market makers can turn this price around at any time that they want. However, if we're going to play this smart, retail needs to be able to spot these moves, recognize when the market maker is going to turn the price around on us, and either negotiate our positions so that we can hedge ourselves or set limit orders and wait for the price action to turn in our favor so that we can rip those shares out of their hands and take it back up to the upside. If you had gotten trapped in this move, you would have taken a 33% loss. If you had waited and been patient, you could have gotten filled at 77 cents, and maybe we'll get filled at 70 cents. I don't know. But that's what I'm targeting. So I'm going to be patient, and I'm going to wait for the market maker to bring the price to me. And this is what I am suggesting everybody learns how to do, because this is how the institutions trade. This is how they work. You are their product, and your liquidity is what they're after. It's your money that they're after. Don't give it to them easily, and learn how to move with the institutions in order to take advantage of their trades to get you profitable. I hope that this all made sense to everybody. If this is unclear, please let me know in the comments. Please like the video and subscribe if you want to see more of this stuff. We're doing these kinds of tutorial videos in Hell's Trading Floor every single day. Let me know what you guys want to see next, and I'll see you next time. Until then, have a hell of a time in the markets.